If you'd like to see more of our videos, please subscribe to our channel on YouTube or follow us here on Instagram. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is February 3rd, 2020, and today is Monday morning. So looking at the major economic events of the day, just one event coming out of the United States at 5 p.m. South African time, ISM manufacturing PMI number coming out. Now, a few things just to make note. There have been a lot of corporate earnings reports last week. We saw Google, we saw Apple, we saw Facebook, we saw Microsoft, and they are affecting the markets tremendously. Now, another factor you have to take in is Brexit into this, and moving into this week, we will hit Iowa primaries, which is pretty much going to let us know who the head of the Democratic Party is going to be, okay? And it's going to kind of like fan out some of the secondaries and thirds, and we're going to be looking at maybe 2 to 3 major Democratic primary potentials for president bid, okay? So that's something to look forward to this week. Now, looking at the markets, first looking at the GBP rallies on Brexit, major event. We're going to take a look at that. We see a nice little fade opportunity there. Now, looking at the Dow Jones bouncing after major sell-off, I'm talking about 600 points last Friday. Okay, partially what's going on in China with the coronavirus virus, okay, that scare is still there. Okay, partially also as we're going into this week of the primaries. And lastly, also because people are just booking their money, okay? The markets have really been on fire the past 6 months. So really, it's quite natural for the Dow Jones to actually slide off like this. And next, looking at the commodities, gold slides while oil breaks support. Okay, oil breaking support because the consumption of oil has been lower because of what's going on in China. And lastly, looking at the stocks, Amazon breaks to new record highs last week, okay, after beating its earnings to 2047-ish level, okay, but selling off after that. But let's take a look at the markets and see what we can expect from today's trading. So we're going to first take a look at the Euro USD at a 4-hour chart. You can see this nice little bounce that we had over the last couple of days. And this is really back of the GBP pushing the dollar lower, okay? And this is just jumping about 80 pips, okay? Nothing to really write home about, but on a currency that's been trading within a 40 to 30 pip range, this is a massive kind of situation, okay? We are hitting a little bit of a resistance at this level, so if we do see some correction, do expect it. Now, let's just jump into the GBP USD to give us that perspective. Now, we're looking at a daily chart here of the GBP USD, excuse me, and as you can see pretty much that we are hitting this resistance-ish area, this 131.90-ish area, just about there, and we had this support area right here. So this has been, kind of like really been trading within the range, okay? Now, it is setting up a little bit of a wedge formation, as you could see right there, okay? Altogether, okay, if it does break above this 132, then I do expect it to continue higher. However, if it does fade here, okay, which might be the case, okay, because we still don't know what the ramifications of Brexit are. I'm not talking about the legal ramifications. I'm talking about the economic ramifications, the ripple effects of how it's actually going to play out. I think we're still in a quandary there. And because of that, I think we're going to sell off. And this was just a nice little bounce. Okay, I don't think that this is really changing its character here. But time will tell as we enter today and later this week's sessions. Now, looking at gold, selling off here, 1578, sliding on the fact that things are kind of like regular again, okay? We're trading at this 1578, a minor support level, nothing really to write home about. If we do break this level, we can maybe sell off, continue to 1571, but something to consider as we go into this week. Now, oil has really been the big one here, breaking that 52. Remember last week, I was watching this several days, and I mentioned this. If it does break this 52 support, it will break lower, and sure enough, it did, and hit 51. Now, this is really colossal. Now, this support level is subsequent resistance, and with that said, if we don't get that correctional move, we could see this further decline on the downside, okay? It does have room to go further down, believe it or not, right? Because this has really been trading, as low as $28 3 years ago. Okay, so with that said, this does have some room to go down. Now, jumping into the Dow Jones, all right, now this is really the big one. This was the massive sell-off, 28,760, okay, was where we opened up Friday and we sold off to 28,181, which is roughly about 600 points. Now we're bouncing this morning at 28,326. Now we were at this point just a few months ago, okay, just a month ago, excuse me, at this level. Let's just highlight that for the record right there. Okay, we touched that support level, but the difference here, okay, and this is why I'm a little bit more bearish now than I was back then. Okay, here we touched our moving average, but we didn't breach it. Okay, the 14-day moving average was not breached. Here we've breached both the 14-day and the 30-day moving average, so this bounce may create a situation where we could slide further down. Now, it could be because people are taking money off the table, because we're hitting, you know, the Democratic primaries, so on and so forth. All that stuff is true, okay? But if we don't correct ourselves on the upside, then I do think that we may make a further correction on the downside, okay? It might not happen today, might happen as the week progresses and as we go into the month. Now, looking at some of the stocks, okay, this is Amazon on a weekly chart. Okay, that's how much I have to really show you here, because this has hit this level several times, but it hasn't broke above it. Okay, 2047 is the high, and we hit it once more, but we didn't break to new highs. Okay, we didn't sustain the new highs. Excuse me, we did hit new highs, but we didn't sustain the new highs, which is really something very important to understand, because if that means that we haven't, you know, held that line, okay, had we closed at 2043, I would have been much more aggressive on the upside on it. But I'm not as aggressive here because ultimately it may correct itself on the downside because it's not breaking out higher. Okay, I would have really have liked this to break this area higher, but it's not. And with that said, it may be a place where we do retrace a little bit, find ourselves another cushion, trade sideways for a while until we correct ourselves back on the upside, because I don't see, you know, the upward momentum continuing. Now, looking at Facebook, same story. Okay, we hit 223 and then making a major correction there. Google, same story. Okay, JP Morgan has been pretty weak of recently, okay, retracing from our 140 to 132. I'm not saying we're going back to $100, right, in all these pairs, that we're going to actually retrace all the way down, you know, to where we are a year and a half ago. But I do think that this correction has been met, okay, and was already due for quite some time. Now, looking at Microsoft, same story, okay, we did gap up. A lot of positive news on it. 172 made a double top and then retraced. Okay, so lots of things happening. However, looking at the one stock that's carrying us higher, okay, 649 for Tesla. Amazing situation for Tesla right here, and showing no point of reversal. Okay, but you know, these type of formations are crying out reversals. Okay, just that it takes a time until that actually fruits. This is Fred Razak. I want to wish everybody a great trading day. Thank you.